Hey YouTube, this is Lame Hillbilly or Austin. It's been a while since I made a video, so sorry if I'm a little bit rusty and I say a bunch of random shit that could be rambling. But I really wanted to get this video out to start education on Glacier, the V33 DEX. So this video, of course, is titled Solidly for Dummies, and I hope to expand on all the things that Solidly has that Uniswap V2 doesn't, so that you are the best educated member and investor for your own financial gain, right? And that's really my goal is when I develop financial products for the blockchain. My goal is to make sure that every investor is on the same playing field, and so I do that through trying to make these crazy contracts readable to the average person, right? Because that's who uses the blockchain. Obviously, there's elites out there that abuse it and take advantage of it for their own gain. But my goal is to make sure that you understand it so that you're best prepared for the stuff that I produce. And so Glacier is one of the big things coming up. And I want to make sure that every investor is feeling very comfortable in the style of the DEX so that you know what you're going to do day one, March 30th. Of course, that is our launch date. So let's dig into it. Some of the first things that you got to know is what is a DEX? So DEX stands for Decentralized Exchange, and it's pretty much like any of the centralized exchange like Coinbase or anything else, except it's done through the blockchain. And what it does is it has liquidity providers, you all as users or anybody protocols, and it takes two tokens and puts them in a 50-50 pool. And that allows users to trade off of those assets, and those LP pools constantly are a fraction of each other. So it's displayed. That's how the price is made. Is that there's two LPs, and it's the comparison of those two and how much of one token or the other token. And whenever someone buys from one side of the LP, that token is then extracted from the LP, and the other one is beefed up. But that comparison is always 50-50. So that's kind of what a decentralized exchange is. And it's kind of permissionless in the fact that it's not centrally managed by anybody. It's done by contracts. It's completely verifiable on the blockchain. And so that's kind of the main differences of a DEX comparatively to what we call a SEX or a centralized exchange. Why would you as a person, as an individual and investor need a DEX? I think in the coming years, you're going to see a lot more popular opinions on, decentralization, especially after this year's massive failure from centralized exchanges. And so I think that if you're someone that wants to hold assets that you believe in the future of, and you want to yield off of those assets, I think that decentralized exchanges really allow you as a user to take power of that, and it's a really special thing, and so that's why I love it. And then the last thing that you're going to hear as a buzzword is governance. And in decentralized exchange, there has to be something, and this is all DeFi really, there has to be something that has an overall management style. Of course, in a perfect world, governance would be perfect. It's democracy, it's whatever the most popular vote is. And that's kind of the direction of the DEX. So there could be a vote on, if we want to implement this feature or whitelist these tokens. Now, these are just examples, and this won't be something that happens on Glacier from the launch. Really, I'm just explaining the point of governance, and really how it works in blockchain is there is a certain governance token, which in our case is V Glacier, and it allows you to do something specific to that protocol. So that's kind of what you can expect, is that it allows you to do something with the protocol that kind of manages where emissions go, where fees are taken from. It gives you the power, the user the power, and that's really what decentralization is all about. So that is kind of the overview of the hot topics of if you're a very new user to DeFi. That hopefully helps expand. And of course, you probably should do a little more research before you say, "Oh, I've heard Lame Hillbilly's video, and now I'm ready to jump straight in." So now we're going to break down all the different features of the Solidly DEXs. So why is the Solidly model different from current DEXs? It's much more efficient on emissions. And if you don't know, some of the popular exchanges that you use in DeFi right now, like PancakeSwap, Trader Joe, and all of the big dogs that use the Uniswap V2 model, they're all centralized emissions. They point the emissions, how much Joe, how much Cake, how much all of these emission tokens are getting pointed to each different farm. With Solidly, it's not like that, right? It's determined by the user base with the V Glacier. So week over week, you'll be committing a vote to where you think the most fees are or where the best place to add emissions to. Right. So if you think AVAX USDC is a really good place, you already have LP there and you want to earn higher emissions, maybe you vote for AVAX USDC. And so what that does is if there's a mass majority of people that vote for that, then the emissions will boost up. Say it was 10% the previous week and 12% of all vGlacier votes vote on the AVAX pair. Well, now you've got 12% emissions and so on and so forth for the entire purpose of the DEX or the voting process. That's kind of how it goes. So it's much more efficient in that way that there is active management on the emissions constantly. Week over week, people are fighting for the highest emissions. And so that there's no way that I can control the emissions. There's no way you can control the emissions. It's done by a mass amount of people. And that's why I think it's much more efficient because it adds emissions where it counts and where users are looking to. It's decentralized. And again, I already referenced this just in the previous statement. I don't control the emissions. You do. Every user does. And so what you get is that anybody that wants to whitelist or have a gauge at it, and I can explain gauges in the short term here on this video, but anybody that wants to get at it, they have a fight. They have a fighting chance at getting emissions, showing that, their community, if they vote with vGlacier, then they're going to have higher yield for that token. And so it's much better for protocols actually, because it's cheaper to actually gain emissions from something like Glacier than it is for something like Frozen Walrus, which of course is, I'm the founder of as well, where I had to create a token called Walrus Share as a way for me to incentivize liquidity because Trader Joe wasn't going to give me those emissions. But now with Glacier, as a protocol owner, it's great. I don't have to fight to keep another token afloat, right, in this low liquidity market. I can just get a bigger and bigger governance and build a position and build up a community that will vote for that pair. And that's all that's required to get boosted emissions. And if my emissions of Glacier to that pair go up, then more people will be adding liquidity to that pair. And so that's kind of the thing. And so the third point is it's great for all parties. It's great for protocols. It's great for retail. It's great for LP farmers, governance holders. There's so many different ways to earn. You have the LP where you can earn emissions on every single pair. As a protocol, again, I already just explained how it's kind of beneficial to you all. Retail people that are trading, the good news is the fees are very small. They're about 0.2% for most pairs, and then stable pairs, it's 0.02%. And it's usually better than most Uniswap V2 models because they take those fees and use it for business runway. But 100% of most solid DEXs, I'll say most, and especially Glacier, 100% of those fees are driven back to you all as users. So there's two ways to earn. You're going to be able to earn from Glacier emissions on the LP side. And then if you own a vGlacier position, you will be able to earn off of the fees. Also included in those fees is bribes. And so what bribes are is essentially protocols, being Glacier, being anybody that's listed on there, can actually go in and add extra incentives in any currency that's currently whitelisted on the website. So if they want to use USDC, if they want to use more Glacier, if they want to use AVAX, it doesn't matter. They can use that and add $5,000, $10,000, whatever they want to add, and it will add into the vote APR for vGlacier holders to see. And if you think about that kind of psychologically, like what it does for users is if you're a vGlacier holder and you're thinking, where do I put my vote at? And you see this protocol bribing $5,000 and the APR for that vote is quite high, then you're going to vote for that pair. And that's exactly what they want, because then what do they get? Higher emissions, and higher emissions lead to higher LP, higher fees. And that is what we call a flywheel effect. It's benefit after benefit after benefit, right? An example would be the Glacier AVAX pool. We could, for instance, add 5,000 USDC as a bribe for the week to disperse amongst users that vote for our pair. And of course, that would disperse evenly amongst the voters. So, that's one of the things that we could do. And that would really add to the voting APR. And for an example, if there's 5,000 of fees for the AVAX Glacier pair, and then also we add an extra additional 5,000, the user sees an APR represented by $10,000 because there's 5,000 in bribes, and then there's also 5,000 in fees. So you combine those together, and that is what's getting dispersed evenly amongst the voters of that pool. So it's really cool to have bribes on the platform. I'm excited to see the kind of partners that we bring in that want to participate in bribing. And this method also incentivizes cheaply incentivizes liquidity to certain pairs. We found that it costs less money for protocols to give out bribes than it does to incentivize their own liquidity with a separate token, a centralized emission model. It's much cheaper for that protocol. So that's why you're going to see bribes pop up quite often. So, so let's talk about the components, and I've already touched a little bit on it, but to go in a little bit deeper, we have swapping. Of course, I've talked about it. Low fee. It's a low fee model. There's a difference in so in Uniswap, it's all one. It's all subject to the same swap fee. In these solidly DEXs, you have a volatile and a stable. So a stable would be like USDC, USDT pair, and then a volatile would be like AVAX, USDC, or Walrus, AVAX, whatever it is that's not two stable coins that already have a predetermined value, that would be deemed as a volatile pair and would be subject to the 0.2% fees. You also have LP providing, just like all of your popular DEXs that you see out there. You earn Glacier on every pair that has an active gauge, and a gauge is pretty much a faucet to turn on voting power, right? So if we add a gauge to a protocol, they whitelist, and we add a gauge to it, what that is going to, in essence, do is allow users with V Glacier to vote on that pair. And the reason we would take gauges or not give gauges is because it's an unproductive pair. It could be a malicious pair. So we can't give gauges to every single platform or protocol that wants to get listed. We have to make sure that there's some level of centralization there to make sure that we are actively seeking for the best pairs on the platform. And then you also get emissions change week over week based on governance. So 1 week, your AVAX pair may be earning 10%, like I said. And then the following week, say AVAX runs and there's a lot of fees, so that actually drives the voting APR. Then maybe AVAX gets boosted to 15 to 20%. And so you earn by doing nothing. And so that's a really cool model. And that's one of the great things about being an LP provider on the platform. And then one of the bigger ones to discuss and kind of talk about, because it's a little bit different than the Uniswap V2 DEXs that you see popular on the market right now, is voting. So you take Glacier and you turn it into V Glacier for certain lock periods, right? So what you're going to do is essentially take the liquid Glacier. You're going to be given a menu called vote or lock, I'm sorry. And when you lock, there's going to be different sets of lock periods. You're going to be given a calendar, and there's going to be a max lock period for retail. And then there's going to be any day before that. And so what you'll see is as you lock, the longer you lock, the more V Glacier you're given. So as an example, if you lock for our max lock of 3 months, you are given 100% of your V Glacier. So if you had 100 Glacier and you turn it for 3 months into V Glacier, your V Glacier would then represent 100 V Glacier. And if you did it for 1.5 months, it would represent half of that, and you would only have half the governance power. But you would take less risk because you've taken less lock, right? So also to note is that when you do move into an illiquid position of V Glacier, it is a ERC 721, or a more popular term would be NFT. So that means you can't sell it on the platform, but you can sell it on secondary markets or NFT marketplaces, right? So if you have this V Glacier position and say Glacier runs up and you've got some family commitments, and all of a sudden you need to sell that Glacier, but now you can't because it's illiquid, you can always sell it on a secondary market. And that is a really cool thing that you can kind of get out of your position if you get into a point of no return and you really need those finances and you made the mistake. So that's something to keep in mind, is that you have less risk. You're not just in an illiquid token. And then also with your token, if you lock into, again, let's go back to the example of 100 V Glacier. You have now 100 V Glacier. You've locked 100 Glacier up for 3 months. What's going to happen with that is week over week, it will start linearly unvesting. And what that means is that the first week, you'll now have 96 V Glacier governance power. And the following week, 92. And then the following week again and again and again, all 3 months, it'll continue to dwindle down in governance power. And there's a reason for this. But the good news is that you can take it week over week and continue to recompound it and max lock it so that you can have the maximum governance power. And really all it is a gamification to make sure that users are taking risk appropriately for the platform's benefit. And so if you think about it, if we just gave you 100% V Glacier and for 3 months we never unvested it, right? Then you have governance you don't even have to think about. But now with it unvesting, you'll have to be active, engaged, and looking for the most awesome pairs to vote for. And so what that does is allow the user to gain more knowledge, be more active for the platform. It does a lot of things psychologically, and also just as a platform, it does amazing things for us to have active and engaged investors. So that's why you see that linear unvest. So don't worry, you can always recompound it back into your V Glacier every single time it unvests. You don't have to worry. You can maintain your 3-month lock period and be active and have 100% of your voting power. You just have to be, mindful. And that's why I'm creating these videos. So what are the best ways to choose what to vote for? That could be a hot topic for you as an investor if you're new to these kind of DEXs. One of them would be vote on pairings you are aligned with. So if you're in a protocol, maybe they're going to put in a big bribe, and you are already have an LP position in there and you're fighting for that protocol to get more emissions, vote on them. Vote on pairings with the most fees. You can always just go and sort by the highest fees and vote for that. Now, the problem with doing that, and this is where kind of arbitrage comes in, is other people are going to be doing the same thing. So as more governance gets voted on specific pairs, the fees are being distributed to more people. And so you have to be kind of careful and maybe find a diamond in the rough of people that aren't really voting on pairs that you think are going to acquire a lot more fees than are current. And then vote on pairings with the most bribes. And bribes are, again, what protocols are adding into their pairs, or what Glacier is adding into these pairs to make them more lucrative than just the fees alone. And it's kind of just a boost of visibility to you as users for what you should vote on, and gives you the best idea of what to do. Voting determines emissions for the following epoch. So if we look at an example, if there's 2 LP pools and they both have 50-50 governance votes, meaning there's 2 V Glacier in existence and one pool gets 1 V Glacier voted and the other gets 1 V Glacier voted, then both of those will, the following week, both of those LP pairings will get 50% of the emissions. Let's go to the following week and say now there's more governance. There is maybe 4 V Glacier and 3 of those get voted on one pair and 1 gets voted on the other. So what that's going to do is 75% of all Glacier emissions will go to the one that had 3 votes, and 25% of emissions would go for the one that has 1 vote. And so obviously this is a very reduced example, but just to give you an idea is that 100% of votes are always counted. And that is the new emission structure week over week. So everybody has a fighting chance every single week to get new emissions, to bribe more people, and to, develop on the platform to be a really good hub of decentralized liquidity. So another thing that you'll see in other solidly models, and if you don't know anything about it, cool, now you do. There is a rebase mechanic in some of these solidly forks. And so what that essentially does is allow a user that has a very large position of governance to maintain that. And it reduces the supply of governance over time, so that, they always have kind of a monopoly. And so the reason I don't have it implemented is because I actually don't enjoy that. I like that there has to be active management in your system. If you're going to participate in governance, you have to constantly apply risk to yourself and continue to buy and lock Glacier. Otherwise, you have people that got in early maybe and have a large governance position, and they never get flooded with new governance. And so essentially they can have huge governance from day one and never lose that power. And I think that could be very bad in the long term. So that's one of the reasons that I don't have it. And lastly, on this video, on the things that I want to touch as an introduction to solidly forks is, in this model, everyone wins. Users get 100% of the fees. The protocol earns by expanding tokens and partners to engage more users and gain more fees. And protocols earn cheap liquidity and can even participate in bribing voting to earn their own tokens trading fees. And so that's an example of maybe something Frozen Walrus could do, or other participating protocols, where if we earn the fees of that platform or of that token trading, we can do anything we want with those tokens, because as fees are added to the system from people trading, the V governance holders actually get both coins in that LP pair, in the trading pair. So the actual fees are represented in both. If it's a Glacier AVAX pair, let's say, you'd be at both Glacier and AVAX. So you'll get fees in both. So you can really do anything you want with those tokens. You could burn the Glacier, you could sell the Glacier, you can do whatever you want. And so protocols with their own tokens are able to do the exact same thing, especially if they're a majority vote on their own pair. So I really think the solidly model is a beautiful thing. I think that's why you're seeing such hype in it right now. And I think that's one of the great things, and one of the things I'm most excited about is that, you know, it really adds this layer of flexibility for protocols to have a fighting chance, in a low liquidity market, to have a flywheel effect that really impacts their LP in a positive way. And yeah, that's what I've got for today's video. Hopefully, after you've watched it, maybe you have some more questions, and always reach out to me in Discord, and I can make another video specific to each category here, maybe. You know, and it's been a long time since I've made a video, so it's difficult to come up in front of camera and start talking like this, but this is kind of what I'm good at. So hopefully, you know, maybe after this video, you're able to determine the risk versus reward, kind of what to expect from Glacier. And lastly, let's talk about the launch. Let's talk about what you can expect for the token price. You know, I've listed the token at a lower fully diluted value, which is called FDV, which you can see on DEX Screener. It's the value of all the tokens if they were dispersed, liquid, and Glacier has 150 million at 3 cents. So if you calculate that out, that is $4.5 million. And so our FDV is 4.5 million. Now it's quite lower than all the other solidly forks that I've seen. And I did that on purpose because I want buying pressure on the token. Hopefully we don't get bots. We are going to add initial LP to the, to the platform for Glacier. But, you know, with it being kind of undervalued from the start, understand the risk of buying in. If you buy in over top of bots or buy in on a bunch of hype, just be careful, you know, understand what you're doing and don't just buy into the hype. Understand the fundamentals at play and understand what you're going to do with that Glacier when you buy it. If you're just trading it, cool, that's fees for users. But just be careful. And I've seen a lot of launches go kind of sideways because a lot of people bought into the hype. And it's great because these tokens can go very well and do very good things, and they have long-lasting value from the governance power and constantly reducing the supply through locking mechanics. But I just wanted to make sure that I ended the video saying, you know, no matter what your plan is for Glacier, no matter if you're mercenary capital or whatever else you're doing, just have a plan of action and stick to it, and don't fall into the category of hype. And if you are getting into the category of hype, just make sure you understand the risk and what you as a person and individual are capable of. If you're not good at making good trades, it might not be good to try and get in early. Maybe wait until there's an initial sell-off, wait until there's a better price point. Make sure that you're comfortable with your position. I want long-term holders, and I want people that are educated on the platform. That's all I've ever wanted for any of the platforms that I develop, and Glacier is no different. So that's it. I hope you enjoy the video, and I will hopefully make another video soon. So thank you.